Sector Surfer's online retirement calculator was designed for simple organization, and yet to be the most comprehensive online retirement calculator you will find. Everything is in a single view. Your real estate summary, financial assets summary, new savings summary, retirement investment style, current investment style, and of course such information as your current age, retirement age, how long you think you'll live, Social Security, inflation, taxes, and others. Finally, when everything is entered, you can see your annual retirement budget here, and see a graphic chart of it here, or alternatively by clicking the table button, see the year-by-year detail of your plan here. The first time you come to my retirement calculator, the example values and options you see in the video are what will be used as your starting point. After you have changed values and click the Save button at the bottom, the next time you return, your saved results will be your starting point. Let's do a specific example. Starting with your real estate, here you enter your real estate ownership information. There is a column for your home and another column for other property you might own. If you own more than 2 properties, you just lump all of the others together in the second column. All values are entered in thousands of dollars. In this example, the market value of your home is $250,000. If the remaining mortgage is $200,000, then the equity would be the difference between them, which is $50,000. If your monthly payment, principal plus interest, is $1,420, then when multiplied by 12, you get $17,040. Round to the nearest thousand and enter 17. The last line specifies the number of loan years left during which you will make payments. In this example, it is 15 years. These last two amounts matter particularly for the Apply Mortgage checkbox on the lower left. More about that later. Let's say you have a second property, perhaps a cabin in the woods. Let's say that property is worth $175,000 and you have $25,000 equity. Your payments per year are $11,000 and you have 22 years left on the loan. Let's click Recalculate, and we have a new result. In this section, you enter your current financial asset information, your savings and investments to date. Enter your data as being either in a tax-free or taxable account. Generally, they will be taxable unless the assets are in a tax-deferred retirement account such as an IRA, 401k, 453b, or 457b plan. Do your best to separately identify funds held in each of the asset classes of money market, bonds, stocks, and mutual funds. Here again, data is scaled in thousands of dollars. This calculator will use this as your initial asset allocation and then modify it going forward according to the selections made in the frames below for allocation before retirement and allocation after retirement. In this section, you enter new savings that you plan to invest. The column entitled This Year specifies the amount you plan to save this year. The column entitled Final Year specifies the amount you plan to be able to save on the final year before retirement, in today's dollars. For simplicity, the calculator assumes that between this year and the final year, you will linearly ramp up your savings year by year. Hopefully you will be able to save more as your career progresses. Separate your savings into taxable and tax-free amounts. On the last line, provision is made for the possibility that you will come into a sum of money in the future, either through inheritance or company sale. In these two sections, you specify how you would like the calculator to model investing your assets in the period before retirement and in the period after retirement. Click the radio button in each that most closely indicates your intention. This choice allows you to continue with the same balance of asset classes that you specified up here. The next 3 choices are various allocations typical of what might be offered to you by a financial advisor practicing the diversify and rebalance mantra of the financial industry's modern portfolio theory. The average investment return shown for each is based on long-term average returns for its particular mix of asset classes. The 5th choice is to use the 10-year rate of return from your Sector Surfer Strategies page. These choices enable you to experiment with different investment styles and see the effects on your projected retirement budget. Note that when the radio button for Neutralize Inflation is selected, these values will be reduced by the amount you entered for the estimated inflation rate here. A variety of important planning information is entered in this section. In the first three boxes, you enter your current age, the age you plan to retire, and how long you think you will live. The calculator uses this information to determine how many investment years you have before retirement and how many years to make your money last after retirement. Next, you can change the estimate for future inflation. Although it has averaged 2.5% for many decades, you may be inclined to adjust it a bit according to your personal outlook. The calculator assumes, for simplicity, that you will start taking your Social Security retirement benefits at age 65. The annual statement you receive from the Social Security Administration indicates the amount you can expect. You may want to adjust it down a bit if you lack confidence that it will be fully funded. Enter the amount, scaled in thousands of dollars per year. Your average tax rate might be lower in retirement than it is now, unless of course you do really well investing and have a very large retirement budget. Your average tax rate is not the marginal rate you pay on the last dollar earned. If you earned $100,000 and paid $18,000 in taxes, then your average tax rate is 18%. When your real estate mortgage is fully paid, the Apply Mortgage checkbox here allows you to direct the amount of your mortgage payment to additional savings in order to help you beef up your retirement savings in later years. Finally, this checkbox allows you to model the use of a reverse mortgage to slowly take equity back out of your real estate in order to supplement your retirement income. Inflation often clouds our numerical perception of the future. To alleviate that problem, this calculator has a feature that enables you to neutralize inflation or show everything with inflated dollars. By neutralizing inflation, you can evaluate your retirement budget in constant dollars, as you know and love them today. This is basically accomplished by subtracting the estimated inflation rate, entered above, from the nominal value of average return selected in each of these sections. As you change your selection, you will see the returns here change. And back again. And you'll see your retirement budget change. And back again. Now you have a tool to make a meaningful plan. So let's get sector surfing and make it come true.